You are watching history unfold. But you might be looking at the wrong thing. The media is obsessed with a headline about Greenland. They are obsessed with a 10% tariff. They are talking about trade wars, diplomatic insults, and the audacity of the purchase offer. They are interviewing politicians in Copenhagen and angry diplomats in Brussels. But they are missing the forest for the trees. They are focusing on the noise while the signal is screaming red. The event that happened on Sunday, January 18, 2026, was not a trade dispute. It was not a real estate deal. It was a margin call on reality. It was the moment the music stopped in the greatest game of musical chairs ever played in financial history. For 40 years, the global financial system has played a trick on you. They convinced you that a piece of paper saying silver is the same thing as a bar of silver. They convinced you that a digital number on a screen is wealth. They convinced you that unallocated storage is safe. They built a balloon of derivatives, leverage, and debt that is so big it blocks out the sun. This balloon is worth hundreds of trillions of dollars in notional value. And on Sunday, President Trump didn't just impose a tariff. He took a needle and poked the balloon. Today, we are not going to talk about politics. We are not going to debate the merits of buying an island. We are going to talk about the $100 trillion lie that is currently unraveling in real time. We are going to talk about why the silver in your ETF is likely gone. We are going to talk about the legal clauses hidden in the fine print that allow banks to steal your wealth in broad daylight. And we are going to talk about why the price you see on your screen is about to become irrelevant. You think you own silver? Unless you can hold it in your hand right now, unless you can feel the weight of it, you don't own silver. You own a promise. You own a liability. And that promise was just broken. Welcome to the collapse of the paper illusion. This is the story of how the banks lost control and how you can survive the fallout. The $100 trillion lie fractional reserve alchemy. Let's start with the lie. The silver market is not a market. It is a casino where the house rigs the deck, marks the cards, and owns the dealer. For every single ounce of physical silver that actually exists in a vault in London or New York, there are estimated to be hundreds of paper claims traded against it. Some analysts say the ratio is 100 to 1. Some say it is 500 to 1. Think about what that means. Imagine a car dealership. They have one Ferrari sitting on the lot. It is shiny, red, and real. But the dealer sells that same Ferrari to 100 different people. He takes the full cash payment from all of them. He gives each of them a receipt that says one Ferrari. He tells them, "Don't worry, we will keep it safe for you in our garage. You just hold the receipt. This works perfectly fine as long as nobody comes to pick up the car. As long as the customers are happy, just holding the receipt, feeling rich. And trading that receipt back and forth, the dealership looks solvent. The dealer uses the cash to buy yachts and mansions. This is called fractional reserve banking, but applied to precious metals. It is modern alchemy. It is a confidence game. It relies entirely on the assumption that only 1% of people will ever ask for delivery of the real metal. It relies on the apathy of the investor. But what happens when confidence breaks? What happens when a crisis hits and 5 people show up to claim the Ferrari, or 10, or 50? The dealership collapses instantly. The first person gets the car. The other 99 get a lawyer. This is exactly what the Greenland tariff has triggered. By placing a 10% tariff on imports from the United Kingdom, the U.S. government destroyed the mechanism that banks use to hide the shortage. In the past, if too many people demanded delivery in New York COMEX, the banks would quickly ship metal from London LBMA to fill the gap. They would shuffle the one car from the back lot to the front lot to fool the customers. They would lease gold and silver from central banks to flood the market. But now, they can't move the car. The tariff makes it too expensive to ship. The 10% penalty destroys the arbitrage. The illusion of infinite liquidity is shattered. The banks are now staring at a mathematical impossibility. They have sold more silver than exists on the face of the earth. And the holders of those paper contracts are starting to wake up. They are realizing that they don't hold an asset. They hold an IOU from a bankrupt counterparty. This is not a theory. This is the structural reality of the LBMA and the COMEX. They are exchanges built on leverage. And leverage works both ways. When it unwinds, it doesn't unwind slowly. It snaps. We are watching the snap right now. The premium for physical silver is decoupling from the paper price. Why? Because the paper price is the price of the receipt. The physical price is the price of the car, and everyone just realized there's only one car. The legal THEFT, read the fine print or lose everything. Most of you watching this probably own some silver, but how do you own it? Do you have a stack of coins in a safe buried in your backyard? Or do you have shares in an ETF like SLV? Or maybe a pool account at a digital bank? If you own SLV or any other paper derivative, I need you to listen very carefully, because what I am about to tell you might save your financial life. You need to read the prospectus. You need to read the fine print that nobody ever reads because it is boring and full of jargon. In the official documents of the iShares Silver Trust, and many others like it, there are clauses that outline exactly what happens in a crisis. They call it a market disruption event, or a force majeure. That is fancy legal speak for the illusion has broken. And we are not paying you. The prospectus states clearly that if the trustee determines it is not practicable to deliver silver, they have the right to liquidate the trust. And here is the kicker. They don't have to give you silver. They can give you cash. Cash settlement. Memorize those two words. They are the tools of legal theft. Imagine a scenario where the physical price of silver goes to $500 an ounce because nobody can get it. Factories are shutting down. People are panicking. But the paper market is frozen at $30 because the exchange has halted trading. The ETF can declare a force majeure, shut down the fund, and send you a check for $30 per share. They will say they are protecting you. They will say they are following the rules. But in reality, they are forcing you out of your position at the exact moment it becomes most valuable. You miss the entire move. You get paid in fiat currency that is rapidly losing value, while the real asset becomes unobtainable. This is not a bug in the system. It is a feature. It is designed to protect the banks, not you. And let's talk about unlocketed accounts. Many of you might have silver in a bank account in Switzerland or London. But is it allocated or unlocketed? It is unlocketed. You do not own specific bars of silver. You do not have a serial number. You are an unsecured creditor of the bank. That means you effectively loaned money to the bank, and the bank owes you silver. You are a lender. If the bank goes insolvent because of this tariff crisis, do you know where you stand in line? You stand behind the bondholders. You stand behind the secured creditors. You stand behind the depositors. You are at the back of the line. We saw this in the Cyprus banking crisis. We saw this with MF Global. Customer funds can be seized. It is called a bail-in. Your silver holdings will be converted into equity in the failed bank. Congratulations, you are now a shareholder of a bankrupt institution. You might get 5 cents on the dollar, and you will never, ever see an ounce of metal. The Greenland tariff has exposed this risk. It has turned counterparty risk from a theoretical concept into an immediate danger. If your silver is held by a third party, you are trusting that third party to survive a systemic collapse. That is a bet I am not willing to make, and neither should you. The bank run on the LBMA minute by minute. Now, let's look at the epicenter of the earthquake, London, the London Bullion Market Association. This is the heart of the global physical trade, but it is also a black box. They claim to have ample reserves. They publish reports saying everything is fine. But if everything is fine, why did the tariff cause such panic? Because the reserves are not there. We know that for the last 3 years, massive amounts of silver have been drained from London vaults and shipped to India and China. The float, the amount of silver actually available for sale, is almost zero. When the U.S. markets open on Monday, we are going to see a run on the bank. But instead of people lining up at ATMs, it will be industrial giants and sovereign wealth funds lining up at the vaults. Imagine the scene at the vaulting gates in London. Armored trucks from Switzerland, from Asia, from private family offices. They will issue loadout orders. They will demand to take their silver home. This is the nightmare scenario for the bullion banks, because they don't have the metal. So, what will they do? First, they will delay. We have a logistical backlog due to the tariff. The forklift is broken. The paperwork is missing. These are the first signs of default. Then, they will try to settle in cash. They will offer premiums. They will say, "We can't give you the silver today, but here is 50% extra in cash. Please, go away." And the smart money will say, "No, we don't want your paper. We know the paper is worthless. We want the metal." This is when the default happens. It won't be a formal bankruptcy filing on day one. It will be a suspension of withdrawals. Just like FTX halted withdrawals, just like the banks in Lebanon halted withdrawals. Remember the nickel crisis on the LME in 2022. It is the most important precedent we have. When the price of nickel exploded, the exchange simply canceled the trades. They rewrote history to save the Chinese tycoons who were short. They proved that if the casino starts losing, they will flip the table. Do you think they won't do the same for silver? Silver is a far more strategic and politically sensitive asset than nickel. It is used in missiles. It is used in currency. If the price of silver goes to true market value, it bankrupts some of the biggest banks in the world. Do you think the regulators will let that happen? Or do you think they will freeze the market, force settle your contracts, and hand you a check for a fraction of the real value? The Greenland tariff has forced their hand. They cannot hide the shortage anymore because they cannot import the metal to cover the cracks. The dam has broken, and the water is rising fast. If you are standing in the paper market, you are going to drown. The only high ground is physical possession. The great unwinding and historical echoes. What does the world look like when the $100 trillion lie evaporates? It looks like chaos, but it also looks like truth. We are entering a period of backwardation. This is a technical term, but it means something very simple. It means the price of a bird in the hand is worth 2 in the bush. Actually, it's worth 10 in the bush. Spot price future delivery becomes lower than the physical price immediate delivery. We saw this briefly in 1980 with the Hunt brothers. When the Hunt brothers tried to corner the silver market, the exchanges changed the rules. They increased margin requirements. They said liquidation only. They forced the price down. But this time is different. The Hunt brothers were speculators using leverage. Today, the buyers are nations. Today, the buyers are industries that need silver to exist. You cannot margin call a missile manufacturer. You cannot margin call the Chinese government. The spot price might stay managed. They might keep painting the tape at $30 or $40 to pretend inflation is low. But try to buy a monster box of Eagles. Try to buy a 100-ounce bar. You will see premiums of 50%, 80%, maybe 100%. The real price of silver is decoupling from the matrix. We are going back to a peer-to-peer economy. The value will be determined by what you can trade your silver for, not what a screen says. This is the great unwinding of financialization. For 40 years, we built an economy on debt and promises. Now, we're returning to an economy of assets and collateral. The Greenland tariff was just the catalyst. The system was already rotting from the inside. It was a Ponzi scheme running on borrowed time. And the time just ran out. The panic you see in the news? That is the panic of the parasites losing their host. The bankers, The brokers, the paper pushers, they are terrified because their product is becoming worthless. But for you, for the stacker, for the prudent investor, this is not a crisis. This is the moment you have been waiting for. This is why you stacked. This is why you put up with the ridicule from your friends and family who called you a conspiracy theorist. You weren't crazy. You were just early. Be your own central bank the solution. So, what do you do now? First, turn off the television. They will lie to you until the very end. They will tell you it's temporary. They will tell you to stay in the market. Do not listen. Second, audit your position. Look at everything you own. If it has a counterparty risk, eliminate it. If you own SLV, sell it. If you have an unallocated account, demand allocation or cash out immediately. Do it today. Do it now. Take that cash and buy physical metal if you can still find it. Go to your local coin shop. Go to reputable online dealers. If you can't find silver, buy gold. If you can't find gold, buy land. Buy anything that is real. Buy anything that cannot be printed or defaulted on. You need to become your own central bank. You need to be the custodian of your own labor and your own wealth. The system is trying to close the gates. The Greenland tariff is just the first gate. Capital controls will follow. They will try to trap you in the digital system. They will try to force you into CBDC's central bank digital currencies. They will make it hard to withdraw cash. Physical silver is your exit ticket. It is your battery of wealth that works offline. It is the only financial freedom that is truly private. The illusion is over. The curtain has been pulled back. We see the wizard, and he is just a panicked man with a printing press. He has no power over you if you hold the metal. The $100 trillion lie is collapsing. Don't be the one holding the bag. Be the one holding the bar. In the next video, we are going to do something that might scare you. We are going to pull up the official user agreements of the major brokerage apps. We are going to highlight the sections that explain exactly how they can freeze your assets during a tsunami, during a Tezos event. You need to see this with your own eyes to believe it. Hit that subscribe button. Ring the bell. Because the window of opportunity is closing and you need to be ready. You are the bank now. Act like it.